Hi there, I'm Tyler Ballhorn, and this is the Stockscores Market Minutes for April 8th, 2013. This week's topic, solving the markets puzzle. Before I get into that, a reminder that I continue to put on my Stockscores Canadian Active Trader Expos. We've just finished up in Alberta and are off to British Columbia next weekend. I'll be in Vancouver Saturday, April 13th, and Tuesday the 16th, as well as Victoria Monday, April 15th. And then in May, Stockscores users in Toronto and Montreal can join me on Saturday, May 11th and Sunday, May 12th. For more information and to register, go to stockscores.com/skate, that's skate with a C, to learn more. All right, this week's topic, solving the markets puzzle. You know, different markets and sectors are interrelated, and by analyzing the pieces, we can figure out what is driving the overall market. The challenge is to solve the market's puzzle by breaking it down into components and how they relate to one another. Unfortunately, it's always evolving. How the pieces connect to one another will change over time. A few years ago, when Greece was falling apart, we found that gold would go up in an inverse correlation to the stock market because it was a place where people could put money for safety in a time of turmoil. Well, now the market isn't really suffering through that sort of turmoil anymore, and so gold as a hedge to market uncertainty isn't really there. Instead, it has just fizzled away while the market is looking for a new hot market. And so you have to understand how all these things connect, and that's what I'm going to try to do with my analysis this week as we go through the different charts. So let's begin with the chart of the S&P 500. Here we can see the market is in a sideways trading range. Not much of a surprise given that the market is just under its all-time highs. Essentially what's happened is we've rallied over the last 4 months, hit the all-time highs, which is a very strong area of resistance, and now the buyers are trying to justify whether they should push the market through to new highs. Now we had a little bit of a scare in the middle of last week when we had a pretty strong down day, but it has not really broken through any support in the near term. The upward trend line is still there, and the market bounced back pretty nicely over the last 2 trading sessions. My expectation is that this market is going to perhaps rally one more day and get stuck at that red line and then stall and, perhaps fall lower again. Essentially, the market, in terms of the S&P 500, is stuck in a trading range in the near term, and until it can break through that red line, I wouldn't be overly bullish. And if it breaks down through the green line, well, then maybe we're going to see some profit taking. Now, with the market going into earnings starting this week, it'll be important for the market to see whether earnings beat expectations or fall short. And if they start to fall short, we could see a breakthrough support. So in the short term, I'm going to say I'm neutral on the market. In the case that we get a breakout through the red line, I'll get bullish again. And if we break down through the green line, I will get bearish. The Canadian market has fallen off, and what we're seeing globally is just a general global slowdown. The U.S. economy is faring better than most economies in the world, but Canada, because of its emphasis on commodities, is starting to feel the effects of that global slowdown. Simply the world is not buying commodities, and that hurts the Canadian economy, and that is why the Canadian market is lagging the U.S. market. Now, the Canadian market sold off fairly sharply over the last couple of weeks. It is now at support at that upward trend line where it is trying to hold. I'm neutral for now on the Canadian market because it should bounce back in the short term. It's a little bit oversold here, but I want everyone to be a little bit cautious as there are signs of growing weakness in Canada, and therefore we want to err on the side of caution and generally avoid Canadian stocks right now. Here's a chart of the 20-year bond ETF, and again, if we go with that thesis that the globe is slowing down and the place to be is the U.S. because it's the least bad economy in the world, well, then you can understand why the treasuries in the U.S. would have rallied so significantly last week. Now, they've really run ahead of themselves a little bit. The jump up over those 4 days as it broke that downward trend line was a little too fast. My expectation is that treasuries are going to pull back here in the short term. But it does point to the fact that the world is looking to the U.S. as a safe place to put capital. And again, as all these charts interrelate, we can start to see weak Canadian market. Okay, that is a weak global economy. Global economy, if it was strong, we would see commodity prices improving. It's not, and so the Canadian economy is not doing as well. Because the global economy is weak, we're seeing money come into treasuries, we're seeing money park themselves in U.S. stocks, but really the safe U.S. stocks, so you're starting to get a picture of how all these things relate. Now, gold has been falling for some time, essentially because fears about the global economy having a complete collapse are going away, but it is also now at support, and it really, if you look at the very long-term trend for gold, it remains in a very long-term upward trend. However, if gold breaks down through that red line, which is pretty important support, then I think we're going to see a further downdraft in gold. I don't think that's going to happen in the short term. I think we will wind our way sideways here and perhaps in a month or two actually break the downward trend line, but alternatively it could break the red line as support as well. So I'm neutral on gold for now with a bit of a negative bias because of the falling tops on this chart. And oil is essentially in a sideways trading range. Last week I said it was likely going to get stuck in that recent strength that it showed, and it did that 4 days ago on this chart. You see that strong downward day, and everyone starts to get bearish on oil again, but it fell down to support at the upward trend line, which I've drawn in green, and therefore it should hold that. I think oil is just going to grind its way sideways in the near term, not considerable upside or downside potential in the near term. If oil breaks through the red line, that's through resistance, then we're going to go into a bull rally. If it breaks down through the green line, then we're going to go into the next bearish phase. I would say I'm slightly, very slightly, more bearish on oil than I am bullish, simply because the long-term trend in oil has been somewhat negative. And although we're in this consolidation phase for oil right now, given that the trend into this phase was down, there is a slightly greater chance that the trend out of this phase will be down as well. And finally, fear. This is the chart of the VIX, and it is ugly. It continues to be ugly. We've had little blips in it along the way, but there's really no volatility in the market. However, as we're going into earnings season, we could see that start to pick up a little bit as investors get a little more worried about the future. All right, so I'm neutral to bullish on U.S. stocks. I mean, we are in a long-term upward trend. I put a bullish rating on it, but don't expect this market to go anywhere in the near term. I think it's going to grind its way sideways, but there's a lot of risk to the downside. And so although the trend is up, we could be topping out here given that we are at resistance, given that we are coming into the spring when the market normally rolls over. So I want to be pretty cautious with U.S. stocks here. Neutral on the Canadian market. In the short term, it's fallen back. It's a little bit oversold, probably bounces, but not a considerable upside potential in the near term. Gold is at support, so I put a neutral rating on it. I think it bounces a little bit. That could help the Canadian market bounce back as well. But, looking out beyond the very short term, don't get too optimistic about either the Canadian stock market or gold and gold stocks. Oil, I'm neutral, as I said, with a little bit of a long-term bearish bent to that outlook, simply because the market's going sideways, but the trend into that sideways trading was down. As I said, the markets are showing concern about the global economy. Money is looking to hide in the U.S. market, which should allow it to continue to outperform other markets. However, the upside is limited by that long-term resistance at the all-time highs. Gold downside is limited in the short term because we are at support, and oil is likely sideways in the near term. Well, that has been the Stockscores Market Minutes for April 8th, 2013. Have a great week in the market and trade well.